Alright, hello everyone, and welcome to lesson 6, part 3 of the intermediate section in the meme coin trading school. So, hope you guys are doing well. Watched the recent videos. So, what do you recognize about right here? This is the coin that we were trading actually in the last lesson. And as you saw, we were around here, and we decided to take an entry, two entries, one here, it went up to there, went back, and we grabbed another entry. So, of the indicators and the lessons that we looked through and how to, spot a coin, we spotted one and we decided to take it. And guess what? It went up to 43k. We took our profits, two profits, and we got a lovely 2.5 bits. We made that money and got off for today. Simple. That's all you need to do. But in this lesson today, we are going to be going over price action and how to predict the market using price action. And you can put all the other stuff inside with this. So understanding market behavior, price action. So we're gonna go first onto candlestick patterns. And what are candlestick patterns? So candlestick patterns form the building blocks of price action. Each candlestick represents a unit of time and how the price moved within that time frame. The wick shows the range of prices, while the body shows the open and close prices. Okay, one thing we haven't actually gone over is candlesticks. So let's just go over through this diagram I created. We're just going to go to pretty much basic of candlesticks. So, any candlestick, this is what it is. You have the wick, you have the body, and that's it. But you also have the open price and the close price right here. So the open price is always, if it's a bullish candle, I mean a bearish candle, it will always be at the top. And if it's a bullish candle, it will always be at the bottom. So that's what open close price is. Open close price is basically when the candle starts a new candle. So let's go all the way to here. It will basically start a new candle that starts at a level, will go up, down, and if it goes up, it will leave a wick remaining, and if it goes all the way down, you can see the close, which is right there. So it decided to go down, leave a wick, come back up to the open price, and decide to close above, just like that. That is the open and close of the candlestick. So what candlesticks patterns can we show you? So the first one is a doji candle. I'll put that on the screen right here. A doji candle indicates indecision in the market. If it forms at the top of a bullish trend, it could signal a reversal or exhaustion in buying momentum. So in a doji candle, let's just show you right here. Let's find one right here. Okay, here's a good one. You can see a doji candle formed right there, and it showed exhaustion and decided to go bearish just like that. So we just find another one right here. You can see a doji candle. It tried to push up and it couldn't, and it exhausted all the way to the bottom. You can also see it on the bullish side where it formed it on the bottom and decided to push up a bit, but it didn't have enough pressure to break the resistance. And then you have a couple doji candles here. So you have this one right here, and then you have this one right here. So it didn't have enough sell pressure, so it decided to push up a bit more. It didn't have enough buy pressure either, so it just pushed all the way down. That is a doji candle. What is next? We have the engulfing candle. So next we will go over the engulfing candle. An engulfing candle is a bullish engulfing candle, shows that buyers have overwhelmed sellers, where a bearish engulfing candle shows the opposite. So let us go over here and make a little drawing for you guys. Okay, so let's do this. And give me a sec for my annotations. So let's make another candle. Let's go for a box right here. There we go. Okay, give me 1 second. Bear with me, guys. Just working on making this the best drawing you have seen. Let's do that. Make that green, just like that. And let's just drag this through there. There we go. Make that green. Okay, so this is a bearish engulfing candle. So what is it? A bearish engulfing candle is basically when you have a buy and the sell decides to be bigger than the bullish candle, and that signals a downtrend. If it was the opposite, so if the bear should be smaller, let's drag this. Oh, let's drag this over this side. Let's just move these wicks kind of long, and if we make this shorter and our green candle longer, this shows that the sell pressure is less and there's more buy pressure, and it signals an uptrend. So let's find that candle. So you can see over here on the right we have a bearish engulfing candle. The buys are lower and there's a big engulfing candle here, so that means it's going to go down. Shows a downtrend. Let's find another right here. You can see it here as well. You can see it here as well. Those are two bearish, but where would we find a bullish? Let us try find a bullish engulfing candle. Let's see. I mean, technically that is a bullish engulfing candle. This one right here is a bullish engulfing candle, and you know it's that kind of stuff. Yep, so those will be the engulfing candles and the dojis. That is pretty much the candlestick patterns. So a tip is keep an eye on the candlestick formations at key levels, so at the Fibonacci levels that we've said before, the Bollinger Bands. You just combine it all together with support and resistance, and you can signal good trend reversals or continuations. So the next is volume. Volume is a power behind price moves. Volume tells you how much of an asset has been traded during a specific time period. It's one of the most important factors in trading meme coins, as it confirms the strength of price movements. Volume spikes and what they mean. So there's high volume. There's a sudden spike in the volume along with the price movement. It shows that the movement has backing. This could mean that whales or institutional traders are involved. So as you can see right here, there was a good spike in the market, a volume spike. That means that the move was backed here, but you can see those good sell-offs here. So even though there's a very large candle, you can see it reversed all the way back down because it didn't have too much momentum to push it higher. So that's where we took our profit. You can see it was outside the Bollinger Band, so we just took our profit right there. You can see over here as well, there's not much backing between the move, but there is quite a bit of volume dropping down, and the coin just died out. Over here, the volume spiked as well. You can see those good decreased sell pressure volume, and that shows that the move was genuine. And you can probably see an entry because it was held in this zone right here. So a low volume is if the price is moving with little volume, be cautious. It could indicate a false breakout or lack of commitment from traders, as you saw right here. That was quite low volume, even though the candlestick was very big, meaning that it was probably a false breakout, and you'd want to take your profit as fast as you can as soon as it exited the Bollinger Bands, as it was overbought. If I'm speaking too fast, so you can slow down the video. I think I might be. So combine price action with volume to confirm whether a breakout is strong or weak. For example, if a resistance level is broken with strong volume, it indicates a real breakout. So support and resistance. This is how we actually got an entry for this trade. So support and resistance are the most essential tools for understanding where the price is likely to pause or reverse. The support level is, let's just find one on our chart right here. This is how we found our entry. So you can see on our Fibonacci level, it's our key point right here. There was good support. So what we did is we found it was bouncing off this line right here. Let me change the color of our wig right here. Let's make it nice or white. Okay, you can see it was bouncing. It bounced twice off. Then we saw, if it comes back to its entry point right here, we're gonna put an entry because it's a good support zone. So we entered right here, and that was actually in case good for us. So that would be a good support zone. So resistance zone would be, let's find a good resistance zone. You could technically say it's a weak resistance zone. Weak and strong resistance and weak and strong support is when support holds over the long term or resistance holds over the long term. As you can see, it bounced off 3 times, bounced off around nearly 4 times because it went back to the Fibonacci 0.2 level. It bounced off about 4 times, meaning it was strong support. This would be a weak resistance. Let's find a strong resistance, maybe around this level. So there may have been a pretty decent resistance around this level. Even though it broke out, it just came back down. There was a couple of resistance here, and it broke out. So this would be decently, it would be a pretty weak resistance in my opinion. But this is a very strong support. Support shows that where the market is bouncing off, and it'd be a good entry. When price approaches a support resistance level, watch the volume and candlestick patterns for signs of breakout or reversal. For example, a strong bullish engulfing candle at support level with high low volume is a very good buy signal. So as you can see right here on the support, there was actually a bullish engulfing candle right here. It was very small to see, but it was, and it was trading below the EMA, meaning that was a good entry point, and we got our entry price just like that. Let's click buy. There we go. We're in the trade. So, identifying trend direction. This is something, you can do. You scroll out and you just look at a bullish market, which is bullish up like this, bearish is down like this. So you can see, you just draw it out from the bottom. You can see the strong resistance along this line, just like that. This is how you draw a slanted resistance line, which just shows a good steady uptrend. And a downtrend, if it breaks that resistance, that means it's probably going to die out. As it saw, you broke around here, it broke the baseline around here, it's a hard base, and it broke the resistance. That just showed that the coin was about to die. The community was lacking a bunch of other things. That just shows you get out as soon as you can. You don't need to hold too long. Make your money, get out. This is a long-term support line. You can see just like that. We can delete it. It shows that the coin has a strong bullish momentum, and a downtrend, you do it from the top down. This is very sharp downtrend, but it works the same way. You just draw the connecting tops, and if it breaks through, then that means it could probably go up. So consolidation and breakouts. Consolidation is a period where the price moves sideways within a range. It indicates indecision in the market and can often precede explosive moves. So you can see consolidation right here. Let me show you right here. Good consolidation right there. That's a consolidation zone. Then you can see consolidation here as well. Consolidation here. Showed a big spike up just like that. You can see consolidation here. There we go. There we go. There was not much price move. This is what consolidation means, and it can often show a big spike in the price, which as you saw right there. And this you all do with your other indications and your analysis. Fibonacci retracement, as you know, yeah, we've gone over this in the last video. It's just you drag it from the top to bottom. I mean the bottom to top. Pretty simple. And you find the key zones, and you can also add the 1.2, 1.4, 1.6 zones up above along with these ones to find potential zones if the price does break the all-time high from the previous move. So how would we combine all of these? Combining these tools, price action, volume, and support resistance, these tools allow you to build confidence in your trades, just like the technical indicators, which you can use all together with this. If you see, for example, a bullish engulfing pattern forming at key support level with increasing volume, and it's below the Bollinger Bands and it's trading below the EMA, you have multiple signals pointing to a potential long entry. Long means buy, short means sell. Trend lines, when a retracement lines up with a trend line and Fibonacci level, retracement level, it can be a powerful signal for entering a trade. This increases the probability of a successful trade. In conclusion, advanced chart analysis isn't about overloading yourself with indicators. It's about reading the market directly through price action, volume, support and resistance levels, and other tools. In meme coin trading, speed is key, and mastering these techniques will help you get into and out of trades more confidently. By combining these methods, you can get a much clearer picture of what the market is telling you and take advantage of quick moves. Remember, practice is key, so spend time mastering each of these techniques. And just if you have any questions, just go over the video over and over again. This is a pretty simple video. um, Hopefully you guys understood it. If you have any questions, obviously ask in the chat. We'll be in the voice calls usually as well. So have a nice day. We'll see you in the next video, guys.